Good morning, everyone. Welcome to the Quantum Leap Futures Morning Leap session for Thursday, November the 10th, 2016. My name is Doug McKay. I am the founder of Future. I can't talk today. I am the founder of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, take a look at the structure of the market, drill down to our trade levels, our trade targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place regardless of what the market throws at us. We do not bend our plan to the market. We let the market come to our plan. This is a subscription service. If you're interested in checking it out, please send me an email at quantumleapfutures@gmail.com. There's no blog. There's no website. I'm not a commercial venture. This is a self-organized learning environment. Each morning, can't talk to this morning. Each morning we get together in these live sessions, and then we do live trading and analysis during the course of the regular trading plan. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Sorry about that. Got a little bit discombobulated there. Okay, taking a look at yesterday. Yesterday, of course, was the day after the President Trump getting elected, and we had continuation. We have had now, since Trump was elected, the low was at 28.50, the limit down, and we've now gone up and hit the 21.80.50. That gives us 152 points of range since the election night. We opened auction in range yesterday, and we just had an open drive. You didn't want to fight the open drive. You wanted to go with the open drive, and basically the risk is all to the upside. You can see we've been talking about this area up here for months, and how that we were going to come up here and retest this area of unfinished auction. We have a lot of naked crosses. A lot of naked VPOCs, a lot of naked closes, and then most importantly, we have the two all-time highs, the one at 21.85, which is the December all-time high adjusted, and then the unadjusted all-time high at 21.91.50. We've talked about this in the past, that these do not get left unadjusted. They always have a habit of coming back and testing them at some point in time and adjusting them. So we are targeting the 21.91.50 and looking for new all-time highs still. And here we are back in this area above our key line in the sand, which has been at 21.66 forever. So taking a look at the news, we do have news out this morning. We had unemployment claims came out at 254 versus 267 expected, and better than 265 previous. Gave us a little bit of spike to 72.50, I believe it was, 72.75, and then we've rolled over a bit and come down. We're trading in the 68.75 area. We've got 9:15. We've got FOMC Bullard speaking. We've got 10:30 natural gas. We've got the 30-year bond auction at 1, and then we've got the federal budget at 2. So we do have news. We also have the election hangover. We've got a lot of protesting going on against Trump, and so there is some headline news that we have to pay attention to. I always like to start my day with a simple chart, and it is a candlestick chart with a 9 EMA, a 20 SMA, and basically I start on the monthly and start working my way down in the time frames. I'm looking for slope and separation on the moving averages to show me the strength of the trend, where the trend is being challenged, and any other patterns I can see coming in on the different time frames. beautiful multi-year pattern trend to the upside. Then at the end of 15, beginning of 16, they challenge it. Then we take it back, and we're basically getting this continuation pattern towards this new, this unadjusted all-time high at 91.50. Of course, the election took us down to challenge it one more time, but they basically bought it up off of the limit down at 28.50, and here we are trading near the all-time highs again. The trend is to the upside on the large time frame. Going to the week, you can see we've had this 152 point week so far. The weekly ATR means absolutely nothing right now. The 20 period weekly ATR is 47.9250, and we're triple that on the week. So don't worry about the weekly. It means nothing. Critical mass on weekly is not going to be something that is going to affect us this week. We are above the 9 and the 20, so we're getting a possibility of a start of an upward trend. We were starting to get into a downward trend, and we've taken it all back on everybody loving Trump, and we're going higher. Risk is to the upside right now. Going to the daily, you can see that we had this huge down day yesterday. In the Globex, of course, we hit that 2028.50, and then just absolutely ripped after that, and we continued it in the Globex so far tonight. We do have a technical gap going on right here that will probably have to come back and either trade through time in balance to close it, or come back down, or a combination of both. We do have a naked cross right now at the 21.25 1/4. So just keep an eye on that, but this is on the daily. It is not something that we'll be worrying about today. Going to the 4 hour, you can see that we do have a very strong trend going. We've got the slope and separation. We're getting price paralleling the 9. And we talked about this the other day, the difference between a gap and paralleling the price. Here we put in a FUBAR and then a Mr. Sneaky, but we're continuing on. So we have to be looking at the fact that the price is starting to parallel. And of course, this was created, and we talk about this as well in terms of the FUBAR Mr. Sneaky tech gap, is news can revalue in the marketplace, and you've got to be careful on these patterns when they're not created naturally. They're revaluing the marketplace, and we're moving up. So the pattern is to the upside right now. Going to the 1 hour, we did create a FUBAR Mr. Sneaky tech gap on the 1 hour, and we've come down and closed it, tested the 20, popped up, but we're now coming back and testing that. Looking for a balancing day today. We do have a naked cross all the way down here at 21.01 1/4, but it is on the 1 hour. So again, we only look at the 30, the 50, 15, and the 5 minute for intraday, but we are seeing this trend being challenged right now, and we're starting to go sideways and come back and backfill a bit on that huge move up. Going to the 30 minute, same thing. We had the huge move, up, and then since the Globex went sideways, and then we got the continuation pattern and rolled over a bit. Again, put in a new high in the Globex, and then had a Mr. Sneaky, closed that gap, and basically have gone sideways to down, and we're challenging the trend to the downside right now. Going to the 15 minute, we've rolled over. Beautiful FUBAR Mr. Sneaky tech gap happened on the European Open and came down, then looked for continuation, failed, got another it wasn't so much a FUBAR, but Mr. Sneaky, and we rolled over, and now we're below the 9 and the 20 and starting a downward trend and some backfill. Going to the 5 minute, you can see that since the spike to all-time highs on the European Open, I'm sorry, not all-time highs, to Globex highs. We've rolled over, come down, tried to take it back, failed, come down, and now we've got a downward trend. And every time they try to take it back, we fail, and we're getting a move down in the smaller time frame. So coming into the RTH session, there is downward pressure, but let me be clear about this. The risk right now is not to the downside, it is to the upside. So risk is still to the upside right now. Taking a look at the bigger picture, we basically, well, no, that is not the bigger picture. We have completely auctioned through the value area, the longer-term microcomposite value area. We came up here and we talked about this briefly yesterday morning, coming up and accepting the 53 area, and then got continuation, came up, tested that key line in the sand at 66. You can see that our value area high for the microcomposite is up here at 65.50. I'm watching 66, but I have to adjust it down slightly in terms of the shorts. I've got to get below the 2165.75 before I really look at shorts. Above us, we have the 72.75 CHVN. More importantly, we have the microcomposite on the smaller time frame. I'm going to put another profile up here just to bring these two sessions together, and you can see that the microcomposite VPOC is 73 and a quarter, and we're currently trading below that. This is our target to the upside right now today. We are above the key line in the sand right now. As long as we hold above that, there's a lot of repair work to be done here. Most importantly, the adjustment of the all-time adjusted high at 85 and the unadjusted high at 91.50. Below the 66, you want to target that 60.75 and the naked VPOC at 21.59. So you got some strong targets down here between the 60.75 and the 59, and then that 59 also is going to be a warning line to the downside. Below that, we'd be looking for a rotation back into the balance, the most traded price in this area, which is centered around that 52.50. 50 it got adjusted yesterday slightly, but I'm still looking at the 53 as a target. The key line in the sand below us now is the one that was above us at the 43.50, 44.50 area, depending if you want to use the VPOC or the CLVN, but basically in that 44 area, I'm going to use the 43.50 because it's below me now, and I want to make sure that we're below the 43.50, and with that, I'd be looking for a move back into the 21.33 and back into this area of the smaller time frame microcomposite to VPOC down at that 33. The price that we accepted after the news and created the launch pad is the 21.23.50. So that is our next big target to the downside below the 33, and those are our levels on the larger time frame. Taking a look at the Globex, we opened up and we basically chopped during most of the night, and then we made this huge run up into this naked VPOC at 70 and a quarter. They found some sellers, took it down, but they couldn't get below the VWAP, went sideways, and then on the European Open, they spiked up again. I guess Europe likes Trump, and took out this naked VPOC. Now, these are Globex VPOCs. Some of them are also RTH VPOCs. These remain open until we test them in the RTH, and we'll talk about that in a minute. And then they came down and they found support at what was resistance. Okay, basic resistance turning into support, and then they took it back, put in a lower high at 79, and then sold off, came down into the zipper here, and then tried to run again. So we do have a downward trend line in the overnight. We've got a LVN overnight at 63.25. That's going to be imperative for us to hold in order to get the continuation pattern up into some of these higher levels. But we've made some big runs, and it'd be nothing for us to come back and backfill and come back and test some of these levels to the downside. So we've got the 66 as our warning line, and then we've got the 63.25 as our key line in the sand below for rotation back down towards this 60 and 59 area, and possibly even to where Globex VPOC was most of the night, down here at 21.57. So taking a look at the structure yesterday, a clear double distribution day. We have an LVN and the VWAP from yesterday at 46, and then we get the midpoint at that 42.50, which is just below the 43. So this becomes no man's land here between the 46 and the and basically the 41 for the upper distribution. And in itself, that has 3 distribution zones, but I don't think that they're really going to matter. We're currently trading above the prior day range at 70.50. Our range high yesterday was basically 3 ticks above our key line in the sand, and our value area high from yesterday was 66.50. This is going to be our warning line here at the 66. Actually, I'm going to do this. Oh, come on. I have not had much sleep in the last couple days. I'm like, oh, I did it again. Okay. Okay, there we go, finally. Okay, our daily ATR, our 20-period daily ATR full session is running 25.69. We're getting some expansion in our 20-period. And off of the low overnight, our low overnight is 21.55.25. And our high overnight is 20.80.50. So our daily ATR, okay, we've had a 25.25 point range overnight, and we're basically, we've traded the daily ATR. So we're looking for a balanced day with an upside bias into this repair area right here. So looking at our key levels, obviously we've got the 66, and then we've got this little range here between the 64 and the 63. I'm going to use the 63.50. I'm actually going to adjust it down to 63. And then we have our naked close, which is going to be down at 59. Sorry, 15. Yeah, 50. What do I have? I'm sorry, 60.75, and 60.75 is the CHVN. That will be 60.75 with the 59 just below it, which is basically our VPOC, naked VPOC from yesterday. We do have this this CLVN at 59.25. We do have OTF involved, so we do have to watch support just below that 59. So we're going to put a level there and adjust it down to this little LVN right here at 57.50, which was where the VPOC was most of the night. So this is the support we've got to hold for a bigger move down towards the overnight low. And then just below the overnight low, we've got the LVN down here at 53.75. Targeting where the VPOC was most of the yesterday at 52.50. We stole that into the close. And then below that 52.50, there really isn't much support until we get down into this area right here, which is our 46. And then below the 46, we've got to look at the midpoint, which is basically, it's not a breakout candle, but it is a significant candle. So we look at the 50% retracement back to that 42, and anything below that, we'd be looking for a move back down into the the 33 area, which is where that micro composite is. We don't need this anymore, so we can get rid of this. Expand this out. And back towards that 33 and a quarter. Actually, I'm just going to do this. I'm going to move this down to 33 and a quarter. I don't think the value area is going to offer us much with that micro composite just below it. And then below that, targeting the 30 HVN, and then below that we've got the 2750, and then we've got the value area low at 2050. Actually, yeah, no, I'm going to use a 20. No, I'm going to use the 2175, and then the range low down at 2118. I do not expect us to come back down here. And then our key line in the sand now gets moved back up to that 9 and a quarter. And then all our targets remain the same below, but I don't think they're going to come into play today. So, hypotheses. We are one time framing up again. We have had a big move, so we're going to have equal weight on Hypo 1 and Hypo 2. I am looking for an open auction out of range. I'm looking for an open auction out of range, a chop between the range high and the 70 and a quarter, and then I'm looking for a possible move into the prior day range, come down here into the 60, 75 to 59, maybe even 56, 57 area, and find initiative buyers and rip us up into this 73 to 78 area. We've got naked VPOCs at 78 and naked close at 78 and a quarter, and come up and test the overnight high at 80.50 and possibly get a late day push into the 83 to 85 area. We have to have possibility with the strength that we're seeing and the risk to the upside that we could go up and make a new all-time high today. So Hypo 1, open auction, out of range or just in range, chop in this area, come down, take out the naked VPOC and the naked close, find responsive initiative buyers down here, somewhere between the 60 and the 55 area, and then start walking our way back up through these areas up here, which is a lot of repair work to do. So that's Hypo 1. Hypo 2 is an open auction or an open drive or an open test drive, and then just do a gap and go test the range high and hold and push up and get a strong move up and go and make new all-time highs. That's hypo 2. Hypo 3, which is just slightly less in terms of probability, is an open auction, out of range, a push up into the overnight high, fail to break the overnight high or just get a small break, fail to make a new adjusted all-time high, and then find responsive sellers and rotate us all the way back down, come down into the prior day in this upper distribution and push down towards the 44, 45 to 42 area down here and close with maybe even a late day probe down into that 33 and back into this microcomposite VPOC. So hypo 3 is open auction, failure to get above the high and then the overnight high, or just a false breakout, but fail to put in a new adjusted all-time high, and then rotate down through, chop in the 66 area, push through, take out the naked VPOC, chop in this area, and push through down towards the 44. And then hypo 4 is an open auction just out of range, or come in and open up here, failure to get above the 73 area, push down, fail all the way down into the 44 area, chop here, push through and get a big trend day and take back day and come back down here towards this 24, 23. Basically, we traversed the value area yesterday from the low to the high. My hypo 4 is the opposite and get what we call railroad tracks and traverse it back down to the other side and back towards this 20 area. So those are my 4 main hypotheses. Risk is to the upside. Just remember that. We're so close to putting in new all-time highs and adjusting the 2 highs, and with all this repair work to do up here. So the risk is to the upside, but we've had a major run, 152 points off of the low on election night, and we're liable to do some backfill, and we could get a rotational day with a little bit of a downside bias. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.